Hey, what's up, Rob? Yeah, you were telling me yesterday went downhill fast. For a different reason, though. Um, yeah, apparently so. I wasn't around to watch it, to be honest with you. I was out and about, and things were looking really good when I left, and then they stopped looking good. And Trump opened his tweets and dumped the market on us. So, yeah, I think we're, decently heavy on distribution day count at this stage of the game. Let me go double check before I stick my foot in my mouth. 5 on the Nasdaq, 6 on the S&P. Happened pretty quickly. Yeah, IBD has uptrend under pressure. That's probably accurate. And now we were at the top range of the Bollinger Bands. Now we're down at the lower range in the Bollinger Bands. Yesterday turned out to be an outside day on the futures. That's not what I highlighted, but sure, whatever. Yeah, we went up above the previous day's high and then down below the previous day's low, albeit ever so slightly. But it was still an outside day to the downside. Not a good thing. Um, I was actually looking a little bit at what happened previously, just based on this day, and I was kind of likening this day to this day right here, and how we never really had a bounce after that, and we're already down almost another 1%. So I'm not sure if we're going to get another bounce to this level in a minute. If decent potential for a correction right here. So that's kind of can at our distribution days over here. I think all three of these are distribution days, I think. Those are definitely distribution days. I doubt we're going to get a distribution day today. The volume yesterday was just massive. So, yeah, just let it happen, Rob. That's all you can do. That's all you can do. Oh, yeah, Square took it on the chin yesterday. Good thing I never initiated a position there, down about 14, 15%. I'm not even sure why. I didn't even look at earnings. I don't really care. Kiwi, which I think I'm still in. Yeah, I still have my Kiwi. Also reversed yesterday pretty hard. Not a great open this morning. One of the only hopes you have here is that some of the institutions kind of already anticipated not getting a deal with China, and then maybe it's a scare tactic, but it's hard to trade off of maybes, but you try not to trade off of maybes, as a matter of fact. So what's the TQQQ at today? Oh, they don't give me a total there. Yeah, wiped out a good chunk of my gains here really quick. They call that right there an expensive lunch. It's when you go to lunch and it costs you a tremendous amount of money. Although I can't say I would have done anything about that instantly, but when you think about it, that was a great place to sell some of that triple Qs. The TQQQs was up when we broke that bull flag yesterday. That'd have been a great place because we're like way up here. But I don't think anyone necessarily was thinking that yesterday. So can't take it too hard. But yeah, that's by far my largest position. I mean, exponentially, any big word you can think of, that's my largest position. Yeah, how's gold doing today? Gold's down a little bit. Gold got a big boost yesterday. I re-entered a gold trade, and we'll see how it plays out this time. Similar situation to last time, but on a very very bullish day with interest rates lowering and China trade fears kind of stoking the fires of GLD. We'll see how this guy works out. All right, let's go check out the IBD World, see what there is to look at. Exxon beats. All right, good job, Exxon. You're up 0.32%. That's a beat for Exxon. And it looks like we're going to take more losses here today. Down about 1%. I think I may step aside here. Too early for big words. Yeah, basically. All right, so what's up today? We got LK, we got Beyond Meat, which isn't really too far up. We got MJ, also not too far up. NBev, everything that's kind of been hit. OKE finally above that breakout point for the all-time high, going back to 2014. Nothing major here pushing it. Chipotle, Essent, Snap, Match.com, earnings coming up. Snap, Constellation Brands, Annex still looking good after the gap up the other day. I guess last week probably. And that's about it. Everything else is red on my actionable list. Let's peruse through and see the damage done. KG doesn't look too good. GLD's looking a little better. Disney coming back to the 50-day line. That may be a potential point to add to it, but I'm not sure with the signatures the market's showing here. I don't know if I won't be investing in much right now. Market's got to turn around. Market's got to show like at least a week's worth of good faith at this point in the game, at least for me, unless there's just a massive reversal on some fundamental news on China. That's the only thing, and I don't think that's going to happen. Qualys not having it. Amazon also not having it. Amazon had that cup and handle and not really coming to fruition. So far, distribution. Look at that. That's what I call block selling right there. That's block selling for me. EPAM rolling over. QE in the range. Whatever that is rolling over. What is that? Oh, recent IPO bull flag. Or I'm sorry, double bottom. EPAM Fox Factory. GH never really got going. Get out of I'm gonna start leveling out a little bit on my TQQQ here, Rob. I already sold a little bit when I said I'm stepping aside. That's what I meant. And then we'll see how the day goes and if we can bounce. But it's gonna. So we're really heavy in distribution day count. Markets has uptrend under pressure right now, which means that one more day of distribution, the market is going to go into correction. And when it says market's going to go into correction, doesn't mean we're gonna start crashing. That's not what a correction means for those that initiated. A correction just means that it's a time when stocks are less likely to go up and the institutions are showing much more aggressive signs of selling than they typically do, and that usually leads to lower prices of some kind. So, yeah, I've got some I've got some gains in the TQQQ. I'm gonna pull some aside, and if it shows more weakness, I'll pull the rest aside, and probably exit the market, and just wait for cash. I'll be cash and wait for a follow through day. But the correction hasn't occurred yet, so I'm only exiting partial, and we'll see how it goes. But after 3 days of increasing volume to the downside on the Nasdaq, looking eerily similar like this to me, I don't want to be stuck in larger losses. So, we took profits. Where were we here? Yeah, we took profits like over, I think, on this day, and we extended losses and got back in here. So we did good there. Hopefully, if we go back into a correction here with the China trade war thing, and hopefully at some point we'll round back up. Once the Fed's kind of washed out of the markets, and they're like, okay, fine, we're not going to go lower interest rates, and these investors are like whiny children. They'll relent and throw a big ass fit, but if you stand your ground, they'll eventually just relent and get on with their lives. Like, okay, fine, no interest rate cuts. Okay, what are earnings doing this week? But if you let them push you around on interest rates, they'll just keep pushing you around on interest rates. Morning, Alan. Excuse me. Okay. All right, let's go look at the global watch list and see what's on tap there. Fortinet with some earnings, right back to the prior breakout point, I should say. This consolidation right now is not a double bottom. This is just kind of another. Good morning, Jake. Just another, I guess, a loose base on base pattern. This is actually technically another cup and a handle. So a cup and a handle, and then another immediate cup and a handle. How'd you get a 20 times short, Jake? What's that? Oh, the watch list on Thinkorswim? Yeah, they have a type called watch list. It's a gadget, so you can. Yeah, okay. So here's how you add your gadgets down here. Can you see that on my stream? Sometimes the bottom's, my bottom's cut off. Yeah, so there you go. Okay, so at the bottom of this gadget part, you hit this plus, and then it says select your gadget, and then you can select watch list over here. And then you can start making and adding and subtracting to your watch list. So, pretty cool. You got some arrows, just a quick toggle through your watch list. If you click on your watch list here, the name in the middle, it'll give you the options for the watch list, and where you can make personal watch lists and find public watch lists and stuff like that. I just do personal watch lists. I didn't find a lot of value in the public watch list per se. Some of the gap ups and gaps downs, those may be useful, but if you find something more useful, let me know. But create watch list is right here. Share, delete, edit, and you can have multiples up. The only thing kind of weird about the watch list is the navigation. You got to use these big buttons to really, because this whole window is massive if you from a virtual perspective. So anyway, that's how you do it. All right, we got Fortinet here gapping up on what could be a potential breakout point, actually. Right there, we're just above it, 80. The high of that day, 88.65. So 88.75. We're at 89.32. So not too far away. It's not ripping and roaring though. CDNA looks like it's got that bounce off the 50-day. Grub, Tilray. What are you doing? Looks like you're done plummeting. Earnings coming up on 8/13, so that's a little bit. Yeah, you're welcome, Alan. EOG, Cron. TZA, of course, that's getting buoyed. NASDAQ 0.86, 0.87% again. Let's see if we head lower here. I mean, I don't know if there's going to be any more big news today. I'm not sure if the NASDAQ's going to have another massive day. 1% is pretty big, though, for an index. Yeah, MyGen yesterday with a massive green day. Just a massive green day. I mean, look at that. The candle starts all the way at the bottom, and it just launches. They didn't do anything after hours yesterday. We saw this one for a minute. I thought it was very intriguing that there was no before market action, and then just right at the open just expands. That's crazy. All right, CME Group looks like it's possibly putting in a head and shoulders pattern up here. Shoulder, head, maybe a shoulder, neckline right there. If you see any resistance on this guy at all, it could be a potential short. But as you can see, the CME Group usually doesn't work out very well for shorts. Maybe it works out like this, though. I guess this is the one circumstance that it would have worked out, and kind of a loose semblance of a head and shoulder on this one. And on this side, it looks like it's also a loose semblance of a head and shoulder. So, I don't know. We'll see if that one's topped out or not. When was it? When was that last top? Was that 2008? 2007. Yep. 2007, 2008. Boeing. Boeing could be in trouble. We'll see how that goes. This 737 MAX thing is getting out of control. SNCR looks pretty interesting down here. It looks like we've come down from 54. And we bottomed out here at about $4. We're up at about double that. Kind of pretty large cup and handle here, or this could be considered its own cup. But regardless, you've got nice resistance range at about 855 or so, 860. NASDAQ down 1% solid now. Well, it's still very early in the day, so. Yes, Ethan.
Charlie, well, it's kind of our fault, but we didn't mean to do it. He, pooped in our,
Alright, did you clean it up?
I don't know where it is though. So last night, Charlie went in, and I didn't know if he went out or not, but I thought he went out. And then I closed the door
Mm-hmm.
and went to sleep. The next morning, I saw Charlie, like in the middle of my room, and the door was closed. And then I knew he had to be pooping.
Does it smell in your room? Okay. Alright, guys, I gotta go take care of something. I'm just gonna mute the mic. I'll be right back. Could take a few minutes. Okay, I'm back. That was easy. All right, so basically at this stage of the game, I don't know, just take it easy. I'm just going to take it easy, let the market show its stripes, and I'm not going to try to overthink things. I definitely don't want to begin over trading. This isn't a situation where you guys want to start taking a ton of positions. Not with the market sitting on the edge like this. I did take some profits, Justin. Yes, I did. I Yeah, I'm not happy with the market action over here. I wasn't home during the drop yesterday, unfortunately. So, welcome to life, right? So, luckily, be quite frank, I already took a bunch of profits on. I took a bunch of profits, between a week and 2 weeks ago. I'll probably ditch my Kiwi position too. I'll give it some wiggle room. I'll give it some wiggle room here. My GE trade's not doing so hot either. Of course, that's a small trade. Doesn't cost me any money to keep it until it fails, so I may just do that. All right, GLD. Let's see what you're gonna do in lieu of a looming possible market correction. Probably won't go into correction today due to the fact that we had a massive volume day yesterday. But maybe in the next couple of days, we'll see how it goes. Today being Friday, yeah, we'll have to wait over the weekend. I'm surprising MJ is up. I'm guessing they're just moving money into an underperforming sector with potential growth. I don't see a lot of volume coming in. There is some volume here. It's not a ton. There's some nice volume here towards the end of the day there though. That could put a bottom in, as we've had this bottom channel line on the chart here for a long time. We're getting down to that level. I mean, we're really close. We're within a buck. When this range of this chart is like 15 bucks. So we're really, really close to on top of that line that they could start putting a little bit of money into the marijuana sector again as growth is, potentially incoming. And it's been beaten down for so long. We had the nice bounce out of the lows, and then we're fully retracing. Well, one thing about profits, I mean, from a general sense, depending on your trading, time frame, you should always be taking profits. You shouldn't just blanket be in a stock. You should be, actively, actively managing your trades, and that doesn't mean you're always trading, but that means you're making an active decision to stay in or take a profit. But yeah, you definitely don't want a profit to get away from you. That's one of the things that, I mean, I still struggle a little bit with in my options trading, but options are weird and finicky. You make one little mistake in options, and they'll take that profit right away from you. I saw that happen not too long ago, actually. Even after my good trading stint here, I had one of my options kind of get away from me and take away most of my profit. I still sold it profitably, which is fine, great, but I would have made a decent chunk more money if I would have sold a little bit earlier. But sometimes sometimes they just get away from you. That's the nature of the beast. You're never just going to run into, uh, you know, well, I won't say never, but rarely are you going to run into a trade that goes exactly to plan. And that's what your money management strategy is for. And I think part of that money management strategy is taking profits, um, at a predetermined amount, or when it comes back to a predetermined amount. So let's say that amount's 20% for you and something goes up 30, 40, 50%, it comes back down to 20%. Maybe you just take the profit regardless of, maybe the pullback looks benign. You don't think it's going to pull back much further, but you're up your 20% and you were up 30% and it's coming back down. Maybe a rule is you just take the money off the table, because at the end of the day, selling a stock at a loss that was a good sell point on a chart does you no good if you're not making any money. So none of them got enough to take profits. So that's kind of that's a little bit of a different signal, Rob, but a very similar signal. If the market is failing to get up, two things are going on. Number one, your picks are bad. And we all go through those cycles where your picks are bad. Earlier this year, as a matter of fact, I was going through a thing where I'd look at two stocks and pick one, and it was just the wrong one. And then the other one would go, and mine would stagnate or fall. And then, just a little bit ago, I was in the opposite situation where everything I picked was good, and the stuff I didn't pick floundered and didn't do very good. So some of that, you have to look at your process and see, okay, why did I choose this stock over the other stock, or why did I choose that stock over this stock? Was there any discerning feature, why these moved and these didn't? Sometimes it's things that are hard to quantify, like maybe the Match, Cyber, those are kind of in a hotter cyber, those are kind of in a hotter internet sector. Maybe that whole sector stopped working. Forget what sector Pays is in. I think it's like payment processing or something. INSG's been in a big base for a long time. Did you know it was in the base when you bought it? Why did you buy it in the base instead of waiting for the breakout? GPK, if that's what I think it is. Let me look. Is not what I think it is. So, yeah, why did did you buy this on the breakout up here today? But regardless, if you're noticing a situation where they didn't get up enough to take profits, that's also kind of a signal to you that, hey, this market isn't one I should be super heavy in, and I should be lightening my load, because if things just are stalling out and not working on you, you have to reevaluate in some fashion and just let the market do what it's going to do without you. That would have served me well earlier this year. I did that. I've done that pretty well this year. There were 2 or 3 times where I just kind of abstained, and it turned out to be a good move. Another time I didn't abstain, and I probably lost a little bit. INSG at the bottom of the channel. Okay, we can visit a couple of those. INSG, where are you today? I don't know where you are today. So the bottom of the channel, I mean, you should be up unless you bought it like way over here. Did we have a different channel bottom? It's possible these things do get modified from time to time. Yeah, it didn't quite get enough to take profits. I got you. Probably got up a little bit, but not enough to take profits. Yeah. Okay. So here's the thing. Stop losses. Okay. Yeah, good, Rob. Perfect. Yeah, and see, that's what I was saying earlier. When the market just doesn't work for you, oh, over here, yeah. See, when the market's not working for you, now this is looking back a couple of months. It looks like, yeah, so you just something's just got to be revisited. You just got to look at something and um, anyway, if the market's going to fail on us here, which it looks like it's starting to definitely crack, it's really a good time to go back and do some journaling, revisit, revisit what we're doing, revisit how we're doing it, revisit the sectors, kind of see what we're not following correctly. Because it's just about reading the market right is really what it's about. It's like, okay, what did I miss? Like, we had a huge run in Beyond Meat. We had a huge run at LK. We didn't talk about a tremendous amount here, but symmetrical triangle. Yeah, we had this one up here for a while. We had a bunch of ones that didn't move. Match.com was kind of it stalled out a little bit up here. It's not broken. It's not broken, but it's not not rallying either. Also has earnings coming up, and that's always fun. Alan says, "Can't believe went for INSG rather than Tilray." Well, you said yesterday that you flipped a coin. Yeah, cats are fighting. Um, I mean, just ask yourself an honest question. Why would you have picked Tilray versus INSG? And if it was for one reason versus another, why did you go with the coin flip? Essentially. Another question you can ask yourself is, why didn't you take both? I don't really see Tilray on my board here today. But even Tilray yesterday, I mean look at this thing on the overnight session here this morning. We came all the way back down, almost to the gap area there. So anyway, these are the questions you just kind of have to ask yourself. See, there's got to be a process. There has to be a process for, okay, what kind of trader am I? What are the signals that I look for? Because here's the thing, you're going to have to learn to be really good at something. Think of it like computer programming. I'm not sure. What do you do for a living, Alan? I don't know. I'm going to use programming as an example until if you give me an answer or not. Anyway, I'm going to use programming as an example because I'm learning coding. I've been learning for years now. But, I started learning in JavaScript, and actually this last week I started to try to pick up the language Go. But if I didn't focus on JavaScript, I'm a decent JavaScript programmer. Oh, software sales, there you go. But if you're looking to hire a developer and he says, yeah, I spent 3 months doing Go, 3 months doing Ruby, 3 months doing C++, 3 months doing C#, 3 months doing machine learning code, 3 months doing OS programming. I mean, you'd look at the guy and go, okay, so you know nothing. That's what you'd look at the guy and say, like, okay, so what you're telling me is that you literally know nothing because you haven't spent enough time, looking at this thing. And it's kind of the same way anything in life. And it's the same with trading. You've got to learn a set of tools. You have to learn a set of tools. Now, for most of the guys, they talk about, your secondary indicators. I use price and volume primarily and chart patterns in concert with that. A lot of guys use RSI. A lot of guys use MACD. A lot of guys use Bollinger Bands. A lot of guys there's a myriad of different tools you can use. So you have to and moving averages also are wrapped up in that. You kind of have to pick your toolkit a little bit. Play around with a little bit of them. Look at moving average. So your more benign ones, the ones that pretty much everyone uses, price, action. Although some people don't necessarily look at price action, which I view as how the price bar reacts to certain volume influences. That's pretty much how I roll. Moving averages in terms of support and potential resistance. That's also kind of what I do. I look at how prior runs have affected the stock price. How's this consolidation working? Things of that nature. So that's what I do. But other guys, work off of Fibonacci and they do pretty good based on Fibonacci signals. It's a broad market and different tools are going to work on different stocks for different folks. And anyway, the whole point of that is saying that if I ask you a question like that and you don't have a good answer, that just means you need to do a little bit more homework and and come to a conclusion and be like, okay, what did I like about INSG versus Tilray, or why did I buy INSG? Tilray was obviously the better choice, and then really definitively answer why. And look, you have to be honest with yourself, because at the end of the day, if you're fooling yourself to make yourself feel good, you know, usually when you're fooling someone, you're trying to get something out of that person, right? Let's say you're begging on a street corner and you know that you're not homeless. You know you're doing okay, but you're out there looking like a homeless person begging. You're trying to fool the people to giving you money. Well, who are you taking advantage of? The person that's giving you money. But if you're fooling yourself, you're only taking advantage of yourself. So trading is an endeavor in which you really have to be honest, because it is an emotional endeavor. Believe it or not, you don't think it is, but it's very, very emotional. It's very emotional. What's up, Eli? And that's why you're here. Well, very good, Alan. Very good. Glad you're here. But yeah, so, I've got a certain style that I follow. It may not be for everybody, but it works for me. When it comes to the stock market, I follow Investors Business Daily's distribution pattern and follow through day in terms of market cycles, and that's how I manage my TQQQ positions. And in the interim, I do price and volume action, chart patterns, and pullbacks with options, and that's how I've learned to exist. It's not for everybody, but it works for me. That's for sure, Rob. It'll definitely put you on a shorter learning curve. So you weren't with us last when the market broke down last October here, because that was fun. As the market's not at 1.25%, and I'm out. Alan, I think this is what I was thinking. INSG was riding the top of the channel until Tilray looked like it was getting rejected, so I went for INSG. Okay. If I had a little more patience, I would have done better. Okay. Cool. Yeah, so, I would agree with you on that one. So let's do this. Let me go over here. Oh, okay. Let's go over here and let's put in INSG. Let's kind of walk through this a little bit. I see what you're saying. I think you're correct. But I think patience, I think you're correct on both sides. I think patience would have done you good, and I think, so what I think happened here is I think you anticipated a breakout. And I see what you're seeing here. You're right. It is getting kind of up towards the trend lines here. I mean, see, when I say using a tool, trend line is a tool that I use. This is something I've gotten really good at using. Really good at using trend lines. I will say in stocks, though, you have to give them a little bit more leeway. These days, apparently, they like to manipulate them. But yeah, I can see kind of front running a breakout here a little bit. But I think the difference here is that you're front running a breakout. And I think here, if you bought it yesterday, I don't know if you bought it yesterday or the day before. If you bought it the day before, you were also front running a breakout. So you're in the same situation. And you're right. It would have been a 50-50 choice. Because I've got this trend line here as a resistance line, and I could, there's even a pretty clear line to me here that says this is almost a symmetrical triangle, but this pop and the way this shapes up, I don't really like that. But you're front running a breakout in either circumstance, so both trades were wrong, to be honest with you. And then you would have waited for the breakout, which would have happened in the morning, and then you would have had to read the volume, tea leaves, and all that stuff to see if you would have wanted to get involved. But, regardless, the market kind of took everything out yesterday. And INSG just never got above the exact same thing could have happened in INSG. I do like the INSG chart a little bit better. Not a tremendous amount better, because I like the longer base right here. I would have liked a little tighter action up here. And this was pretty good for that. A little bit of tight action. But, look, the moves here aren't life-changing. You're only talking, this one got up as much as 13%, which is a good move. Market down 1.3% now. Gold's creeping up 0.25. I did re-enter my gold trade, Eli, yesterday afternoon. So we'll see how that guy works out. As the market takes it on the chin here, Excuse me. But yeah, from a price action perspective, Alan, um, that's kind of what I look for. So I look for price action to get me interested, and then I really look for me to take a buy, for me to actually take a position. There kind of is a mental. I don't have anything written because I'm an idiot. You guys should have all your stuff written down. I'm not saying that to sound cool. I'm saying that really to ridicule myself publicly, so I'll actually do it at some point, which never happens. And I do find that a lot of my mistakes come from actually not having a truly written plan. Um, where's my thing here? So yeah, let me kind of go through a little checklist that I mentally do, and maybe I'll write it down because I should. So I mean, number one, I guess what would be my number one thing since the market's tanking and there's not much to do unless you're shorting the market. And you still never told me how you got a 20 times short on the index. Whoever mentioned that, Jake. Yeah, how'd you get a times 20 short? I don't think you answered my question, Jake. If you're still here, I don't know how you get a 20x short on the. Where you doing? Is that futures? You can probably get a 20 times exposure with futures. I'd be making a killing with futures right now. I'm not doing that though. I may at some point, but I'm not really. Not really. Anyway, okay. So now that the market's tanking, where's my kiwi? And my kiwi's doing okay. Okay. So I guess one of the first things I would look for is a what would be so okay. I'm gonna list things in no particular order because I'm having a hard time struggling with number one. Because different things will get you involved in stocks. I would say number one is a good prior uptrend. And this is just for me. There are a lot of people trade very similar fashion to me. So, um, okay, good prior uptrend. I would like to see some industry support, some sector support. In other words, a leading sector would be ideal, but not necessarily a prerequisite. But that would make me go really heavy into a trade if I found a really good uptrend in a really good sector. Predictable support. That's probably something I look for. Don't think I've put those two words together before, but I think that is something that I do look for. Like when I got my Beyond Meat trade, there was some predictable support. Hype helps. So here we have the nice prior uptrend, and then you have the sector support could have been considered it was an IPO. There's just lots of hype around, and there's just a lot of hype around Beyond Meat. It's not really in a specific sector, but and then you can see here, I mean, the volume signature. And so what do I mean by volume signature? Very good question. And that really could mean a myriad of things understanding volume is kind of a skill onto itself. But, the uptrend here was in good volume coming up. We had declining volume through this basing structure right here. And then we started going really tight. So right around here, you can see there's kind of a loose cup and handle. But we were very tight here for about a week and a half. And that really got me interested. So tight action really does. So I guess this is not really a checklist, but my wish list. So tight. I would really like to see tight action. Very tight action coupled with low volume. That's a good volume signature. Like this right here is ideal for me. Like seriously. You've got price declining in a small consolidation after a big run, volume declining. This just kind of lined up to have a super run, and super run it did. It went up 35% in like 5 days. And these are kind of few and far between. You don't find these very often. Maybe only 6 times a year, something like that. But if you could hold out for those that do something like that, you'll do pretty good. LK was very similar to that at about the same time frame. We can look at LK as well. Um, you can see here we had, there really wasn't a major prior uptrend, but we did have a nice prior uptrend right here. So that would be my prior uptrend. Sector support, that didn't really have that. I guess I didn't even know what this was, to be honest with you. It's just Chinese coffee apparently. But, I mean, the chart pattern was too good. The market was really bullish a few weeks ago, if you remember. So, predictable support was coming out of this symmetrical triangle right there. And then we had a nice breakout here. And then we had a pullback. And then, again, predictable support, at least for these first. This was kind of a pullback buy. You can see on this guy. So now this isn't every trade that I take, but these were two that recently worked really well. Predictable support came down, did find some support, and worked. And I think part of predictable support is that it worked. If support doesn't work, then it's not being supported, at least in the fashion that you think, and it's probably gonna not do good stuff. Now these were really short-term trades. I honestly can't say that these were my normal trades, but maybe they're becoming the norm because these really long-term plays that I had in 2017 aren't working out. So I kind of had to adjust my strategy here, and this, I guess, was my adjustment. So predictable support down here, we popped up, which got me. I think I tried this trade, and then I failed. And a few days later, it came down and found that support. And there was one day here intraday that had what's called coiling action, and I'll show you that on the intraday. And I got it on that coiling day. And then it started expand, which was right here actually. And the next day it just exploded right there in massive volume. But again, low volume, which is good volume signature, predictable support. We had tight action, if not only for one day. So I'll show you that here. I think I've shown this to, at different days here. So there's that coiling action right there. Oh no, it's down here. There it is. So this is the coiling action. There was another day of coiling which I could have re-entered the trade because I already took profits at that stage. I took profits, I don't know where. I think it was maybe even on this day on the way, I think like right there on the way down, I ended up taking profits. But then it put another coil in the next day, and I could have gone involved there and then been involved in the next run, but I was already up so much I didn't want to give up any profits. So here was a coil. What a coil is basically it's like this. This is a coil. It's lower highs and higher lows. You can call it a symmetrical triangle, but it's basically oscillating action. Ideally with higher lows. And so that's what got me in this one. I mean, it was looking super. It just found another higher low, predictable support, and then it low volume signature, nice coiling action, and then off to the races it went. So those were kind of two trades right there that fit all of those criteria. We can go back and talk about longer term trades. Something I did back in 2017 with Boeing, which was this base right here. So good prior uptrend. Now this is a weekly chart, mind you. This is a few years ago. I'll go to the daily chart here. Okay, cool. 2017. There we go. Okay, so there's Boeing in 2017. So what do we have again? Good prior uptrend. Sector support. It's Boeing. That's enough sector support, really, for Boeing. Predictable support is within this base. Very shallow base. Most traditional stock bases get about 15% deep. I think this was like 8% deep or something stupid like that. 7%. Less than 7% deep base. Definitely predictable support. Volume signature was pretty good. I mean, it wasn't perfect, but it was definitely pretty good. But really, as tight as this was, it's just super good. So volume signature, I would say that this was definitely reasonable. And then tight action, like I said, 7% in a base that should traditionally be 15% is extraordinarily tight action. So definitely took action on Boeing on this one. Made a grip. That was great. Look at another one, which is a longer term play. You guys are getting all my good stuff here today. This is why I did so good, and one of the reasons why I did so good in 2017. Good prior uptrend. This one I'll have to go to the weekly chart. So here's your prior uptrend, and YY was a leader back in the day, 2012, 2013, and it had come down in a very predictable fashion, a very low and slow, long trend line here, huge trend line. So there's our prior uptrend. Okay, and actually, really, what I'm showing you now, to be honest with you, is how you can trade almost on any time frame in the exact same fashion. That's I'm not saying that, but I am now. That's what you're getting to see here. Is I started out with Beyond Meat and LK, which I made good money on, just from a few days, from IPO setups and stuff like that, and then Boeing, which was in the middle of a run, and then now you're seeing a turnaround play with YY. You're really getting kind of a good little education on kind of how things can work. You can use different tools and time frames. You just have to find, like I said earlier, what sits good with you. How does your personality, how do you trade? I don't know. You've got to figure that part of the puzzle out. So here's YY. So YY, I just showed you the good prior uptrend. This was my predictable support, this nice and low and slow. Multi-year decline. Each one of these hashes is a year. So 1 year, 2 year, 2.5 years, this came down. Broke a trend line. YY is a leading, I actually forget what they do. I think they're like streaming in China or something like that. Ads. I think they're streaming ads in China. Okay, so there's sector support. China was a prior leader. It's a bigger market cap stock. Predictable support was, our downtrend here. Also, if you look here, it does have a semblance of coiling. You have the up, the down, the up, the down. It gets tighter, the symmetrical triangle, and then it starts to pop. Your volume signature, on these, it's a bit of a broader stroke for the volume because there's a lot of price action involved, so you kind of have to take it on balance. But I can't say, actually, if you look here, here's a prior uptrend, and here's nice volume. And we don't really have a lot of negative red volume fighting this massive green volume. So a little bit over here, one spike. But here you've got, about a dozen larger volume signatures here. So, and it's right off of what was the ultimate low. So that gives you, and here's a little bull flag. So that gives you some solace that, okay, big money got invested here, and they probably want to push it higher. And tight action right here is our uptrend, another coiling action, another symmetrical triangle, and then off we go to the races. And then, so actually my trade I think was only this leg. I think my trade was only this leg right there, and did pretty good on YY too. So anyway, I don't know why I showed you all that, but I did. Market down almost 1.5%. But yeah, you have to go off of tools that make sense to you. I may look at something and you just don't see it. And that's cool. Just ask a question. I'll be happy to answer it. But in the end, you're going to have to answer those questions yourself. And you're going to have to, okay, why am I in this thing? What is it doing? And actually, to that same token, I thought about YY again as it came back here because I have the recency bias of having a profitable trade. This goes into a little bit of psychology. So here's that trade right there, right? And no, I didn't hold the whole run. If I did, would I have made a shitload of money? Yes. I would have made so much money if I went back and it was like, I don't remember what the number was, but it was a lot more than I actually took out of the market. Anyway, I thought about a similar trade based on this downtrend, but I think the main difference here is I didn't like the predictable support in this fashion. I didn't like how this base set up. There's a huge gap up here. There's a huge gap there. Over here, you can see there were gaps, but obviously it was a longer time frame. The slope was lower. The slope was a little bit more aggressive, and the market just felt different. Like in 2017, the market felt like it wanted to get going. It didn't really feel like that over here. So I never did get into this trade. Also didn't have, some of this volume support down here. We don't have that over here. We have one spike. It's not the same chart. Yeah, and Rob, it happens, dude. That's what your money management rules are for. It just happens, And And I agree with you. Some of the setups haven't worked. Like I was in Cyber, I was in Match. Um, I was in Cyber. I think I took a small profit. I don't remember. I have to go back and look. But I was in Cyber. And, like I said, I was in Match. I was in Team for a minute. I think I was in Atlassian for a minute. Maybe I wasn't. Yeah, I was. I bought it. Oh yeah, I bought it off the 50-day and didn't realize it had earnings the next day. Yeah, Rob, the market cycle in mind. Absolutely. Yeah, I don't really say that in my stock stream much, of course. I don't really do public videos. I just do these live streams. So I was in Yeti for a minute, on this little breakout here. Uh, I'll have to go back and look at the number of trades. Maybe I should do that, at some point. I'm pretty busy today. Pretty sure I'll be busy this week. But at some point, I do need to revisit and actually go through what are my percentage of profitable trades to my percentage of losing trades. But I'm profitable probably because of money management. Maybe, I don't know. I actually don't have a good answer to that one. I am not a complete trader. I can't. In my opinion, I would think you don't have a good business unless you can really really lay out your numbers on the table. The only numbers I can lay out to you is my kind of top line profit. That's really the only thing I can't tell you my average gain. I can't tell you my average loss. So I'm kind of an incomplete business model right now, to be quite frank with you. I mean, I'm making money, but you can have a business that makes money that doesn't know their books and doesn't mean that they're good business people. So maybe I'm not a complete trader. I mean, maybe that's what it is. Is what it is. But yeah, I got some work to do. As I'm sure everybody here does. Beyond Match. But yeah, so we took some trades. Some weren't so profitable. Some took a little bit larger loss than I wanted to. Luckily, my gainers were big. And that's your goal in this game, is to keep your losses small and your gainers huge. Just huge. If you can keep your losses 0 and your gainers huge, you would do pretty good. If you can keep your losses small and your gainers huge, you can do pretty good. I mean, yeah, so the key is to, Warren Buffett said it. The key is rule number 1 is to never lose money. Rule number 2 is to never lose money. We have stop loss orders, but if for some reason things aren't working out the way you anticipate, you do have the ability to kind of cut a trade. And, you got to do small losses. Small losses are key to this market to keep moving that account up. You can't take big losses. You have to take small losses. All right. All right, guys, I'm out of here. I got to go. And I will see you on Monday. Have a good weekend. Stay safe out there. And may God help us in this market correction. All right, guys. I'll see you on Monday. Bye-bye.